Right now, sitting in your bank account, is money you believe is yours. Safe, protected, waiting for you whenever you need it. But here is the truth nobody teaches you in school. That money doesn't fully exist. Your bank doesn't have it. In fact, your bank has lent it to someone else. And while doing that, it created brand new money out of absolutely nothing. This isn't a conspiracy theory. This is how every single bank on earth operates. And it has been happening for over 400 years. To understand how this works, we need to go back to 17th century London. Before banks existed, wealthy people stored their gold with goldsmiths for safekeeping. The goldsmith gave them a paper receipt, proving their gold was there. Over time people started trading those paper receipts instead of the actual gold, because it was easier. The goldsmith noticed something remarkable. Nobody ever came to collect all their gold at the same time. So he started doing something extraordinary, lending out gold that wasn't his, and charging interest on it. That goldsmith, in that moment, invented modern banking. And the trick he discovered is still being used today, on a scale he could never have imagined. Here is exactly how your bank creates money right now, explained simply. You deposit $1,000 into your bank. Your bank is required to keep just 10%, $100, in reserve. The remaining $900 gets loaned out to someone else. That person spends the $900, and it gets deposited into another bank. That bank keeps $90 and lends out $810. That $810 gets deposited somewhere else. That bank keeps $81 and lends out $729. Your original $1,000 deposit has now created $2,439 in new money, and the cycle hasn't even finished yet. By the time the process completes, your single $1,000 deposit has theoretically created up to $10,000 in the money supply. That is the money multiplier. $1, becoming 10, out of thin air. But here is where it gets truly mind-bending. Most U.S. banks today have no set limit on the amount of money they can create. The Federal Reserve removed reserve requirements entirely in March 2020, meaning American banks can technically lend out every single dollar deposited with them. The money being created isn't physical cash. It is literally a number typed into a computer. A ledger entry on a server. The bank doesn't print anything. Doesn't move anything. It simply types a number, and that number becomes real money in the economy. Every mortgage. Every car loan. Every business loan. Created from nothing. Backed by nothing except the promise that you will pay it back. So what's the risk? This system quietly penalizes every saver. As banks create more and more money, the purchasing power of your existing money quietly erodes. That is inflation. Every time a bank creates a new loan, your savings become worth slightly less. And if everyone decided to withdraw their money at the same time, the bank couldn't pay. That is a bank run. It happened in 2008. It happened to Silicon Valley Bank in 2023. And it can happen again, because the money your bank owes you simply does not exist in full. The system works, as long as everyone believes it works. The moment that belief breaks, everything breaks with it. Here is the part that should truly make you think. Banks don't just hold money. They create it. Commercial banks, not governments, are responsible for most of the money in existence today. Even though central banks control monetary policy, most of the money in modern economies is actually created by commercial banks through fractional reserve banking. The institution you trust with your savings is also the institution printing the money that makes those savings worth less every year. They don't teach that in school. But now you know. 400 years ago a London goldsmith discovered he could lend money that didn't exist, and charge interest on it. Today, the world's biggest banks do exactly the same thing. Trillions of dollars. Created from nothing. Every single day. Subscribe to The Economic Order, because the real news is always in the details.